Hi, I'm Bobo. In this week's recap, Hong Kong's private domestic price index fell for the fourth month in a row as home prices face further decline. We've been seeing many more voices, including those of former senior government officials, calling for property cooling measures to be scrapped. On that note, last week, the city's financial secretary Paul Chan Mo Po acknowledged that the current housing market had changed from the previous year when the cooling measures were introduced. Although no specific changes were announced, Chan said they would adopt a pragmatic approach by actively monitoring the market. There are a couple of ways to address this. One way is by relaxing the 15% stamp duty on second and third homes. Another method would be to revise the ad valorem stamp duty to 100 Hong Kong dollars for first homes up to 10 million Hong Kong dollars instead of the current $3 million. Thirdly, the original 30% spicy measures in stamp duty for non-permanent residents can be reduced to about 10%. As the upcoming policy address will likely focus on property cooling measures, many prospective second-hand buyers are adopting a wait-and-see attitude as they await updates on housing policy. In the meantime, the second-hand transaction market remained sluggish. Over the weekend, transaction volume rebounded but remained in these single digits as Hong Kong's four biggest real estate agencies recorded 4 to 6 cases for the city's top 10 blue-chip housing estates. Many homeowners had to reduce prices drastically to attract buyers, so let's check out 3 cases where this happened. Our first case comes from Phase 3 of Mei Foo Sun Chuen in Lai Chi Kok. This was a middle-floor 3-bedroom flat measuring 853 square feet in size. After the owner reduced the original price by 2.08 million Hong Kong dollars, it was purchased by a buyer for 8.2 million Hong Kong dollars at 9,613 Hong Kong dollars per square foot. The original owner put the flat up for sale in April of this year at 10.28 million Hong Kong dollars, but in a rush to migrate, they continued to reduce the price. They had bought the flat for 8.38 million Hong Kong dollars in 2016, booking a loss of 180,000 Hong Kong dollars or 650,000 Hong Kong dollars if you include additional expenses. The flat depreciated by about 2% in value over the 7-year holding period. Our next case comes from New Kwai Fong Gardens, which recorded yet another low-priced transaction. This was a 2-bedroom lower-floor apartment in Block D, measuring 415 square feet in size. It was listed in June this year for 6.18 million Hong Kong dollars, which was then lowered to 5.28 million Hong Kong dollars. Following negotiations, the price was further reduced by 1.12 million Hong Kong dollars and eventually sold for 5.056 million dollars at $12,100 per square foot. The original owner had bought the flat back in 2010 for about 2 million Hong Kong dollars, so they still made a profit of $3.018 million. During the 13-year holding period, the flat appreciated by 1.48 times in value. Luxury homes weren't immune from price reductions either, as one owner suffered over $10 million in losses. This was a lower-floor, 4-bedroom duplex with 2 en-suites at Le Chateau in Kowloon, Tong, measuring nearly 1,500 square feet in size. The flat was sold for 20 million Hong Kong dollars, 1 car parking space included. The original owner purchased the flat firsthand in 2012 for about 32 million Hong Kong dollars and later purchased a parking space for 1.58 million Hong Kong dollars, adding up to $33.72 million total. Over the 11-year holding period, the flat's value dropped by about 40%. The owner is expected to have lost $15 million if we include stamp duty and additional expenses. If we look at a transaction from the development in 2021, an upper floor unit measuring 1,329 square feet in size sold for about $33.8 million, which indicates a 40% price drop within 2 years for this project. Looking at the first-hand market now, it's expected that cooling measures will soon be relaxed. In the meantime, developers slowed down launches of first-hand developments. Over the 3-day weekend, no major transactions were recorded, with only about 13 deals made in the market. The largest number of transactions came from The Grands, a redevelopment project in Kowloon, which sold 3 units in 3 days. Luxury project Mount Arcadia in Chateau sold 2 units by tender on National Day, and the developer launched an additional unit, a 3-bedroom flat measuring 1,337 square feet, to be available for tender from this Friday. In Hung Hom, Henderson's Baker Circle Greenwich development also sold 2 flats, one of them being a 492 square foot 2-bedroom unit with a storage room, which was sold for 10.41 million Hong Kong dollars. This was the project's first transaction, surpassing $10 million. However, it's already the last quarter of the year, and we've only seen 1 new project launched in Tuen Mun so far. That said, at least 5 new projects will be launched in October, involving about 3,138 new units in total. Among the projects are 2 developed by Sun Hung Kai Properties, namely Yoho West in Tuen Shui Wai and Novo Land in Tuen Mun. Looking ahead, keep an eye out for KT Marina's Phase 1 development in Kai Tak. Co-developed by KWA, Wheelock Properties, and China Overseas Land and Investment, the project offers 1,017 1- to 3-bedroom units with a focus on 2-bedroom flats. Sales are expected to boost the primary market, with first-hand transaction volume to rise to 1,000 transactions. That's all for this episode. See you in the next.